Hello everyone, my name is Kyle Timms, Content Marketing Manager here at Dlp Real Estate Capital. We are so glad you joined us here tonight. We're still about 8 minutes from getting started. If you have any questions, please feel free to utilize the chat function on Zoom or comment directly here on social media.
So one of my favorite things about working at DLP is the immense amount of growth that I've seen within the last 2 years. Using Don's elite execution system has helped me within my role of doing project management within the marketing team. I love it so much, it's awesome. And I love to see what we can produce for the clients.
It's a little different in the accounting department just because I don't have technical clients, but my clients, if I had to say, are each individual within this company, my colleagues, my coworkers, and my friends. So being able to aid all of the companies throughout like the financial aspect actually helps in serving our clients, which is helping to live out DLP's mission and vision.
I like to create an environment, a warm environment. I'm the first point of contact. So it's just like Maya Angelou said, people will forget what you say, they'll forget what you do, but they will never forget how you made them feel. And I love making people feel like they matter, they're heard, and I'm here for you for whatever you need. And I like to do that for not only our clients, but also my fellow coworkers.
I love assisting our DLP clients for 2 reasons. First, I just love delivering that wow experience to our investors. I like to make sure that they feel helped and heard at the end of our conversations. Secondly, I just love getting to know them all as people. We're really fortunate to have a wonderful group of investors who are not only incredibly interesting and kind, but they're also some of the most motivated and disciplined people that I have ever met. And I think that's really rare.
Being surrounded by such empowering and wonderful people, I just have the chance every day, the challenge as well, to expand myself personally, professionally, to reach my goals. And it's really just a contagious environment. Everybody's on the same page with that, and it overflows directly with the way we deal with our customers as well. And I love having the opportunity to help people actualize their goals and make some real estate investments.
In July 2019, we brought on board Bright Homes to the DLP family. With that, I've gotten to work very closely with them and love the idea of the net zero ready smart home that we provide. We are reducing our carbon footprint on the world and also providing an affordable yet energy efficient home to the individuals in the Florida market.
Over time, we've become such a family, and I love supporting my team, and they're very dear to my heart, and I know that they would do the same for me. I've grown with the company, like personally and professionally.
So I love serving DLP clients through writing and writing stories about them. They all have interesting stories to tell. So as you can imagine, through all of our different companies, there is never a shortage of clients to write about. We've serviced so many different people, provided thousands of solutions this past year. So I love writing about all of them.
I am truly honored to serve all of our team members and all of our clients. At DLP, we are dreaming big We are living intentionally and we are prospering because we are passionately and innovatively creating prosperity through real estate. Our purpose is clear. Our future is bright. Our vision is 2020 and beyond.
Hi everyone, Kyle Timms back here. I'm the Content Marketing Manager here at DLP Real Estate Capital. We hope you've enjoyed seeing some of the highlights from 2020 so far. We are still a few minutes away from getting started, where we will cut live to CEO Don Wenner in St. Augustine, being joined by Senior Investor Success Manager Larry Hickernell and Managing Director Rich Delgado. Hang tight and we will be getting started soon. Good evening, everyone. Kyle Timms, Content Marketing Manager for DLP Real Estate Capital, back just one last time. We are moments away from getting started, so sit tight and we will have Don, Larry, and Rich broadcasting live from St. Augustine shortly. Good evening, everybody. It is my distinct pleasure to introduce to you, live in St. Augustine, Florida, Mr. Larry Hickernell.
Hey, everybody. Good morning and good evening and good day. It is Larry Hickernell here. Thank you, Kyle. I am so happy to have you here with us today. We are so excited to be with you. Although we are virtual, we would love to thank you for joining us here this evening. We'll be bringing Don on here shortly, but what I did want to just let you know is that we are broadcasting live here from St. Augustine, Florida. I've got Rich here with me as well. And we are going to be doing a raffle this evening as well as Q&A. So if you have questions tonight, please do plug those into the chat box. We would love to answer any and all questions you have. And at the end of the presentation, after the raffle, we'll also be doing breakout rooms so that you can come in and actually speak with our investor success managers, ask more questions, get into some deeper discussion, and then we can take next steps from there. So we're going to go ahead now and get started. So it is my honor to introduce our founder and CEO, Don Wenner.
Thank you, Larry. Appreciate it. I'm sure you're all applauding from home. So appreciate you being with us here tonight. We got a great night here planned to give you some insights to what's going on here at DLP. Talk to you if you haven't been with us before, been a little while, tell you a little bit about what we do, how it works. We're going to give all of our existing investors and you as prospective investors some great insights and overview to how Q2 turned out for us in this crazy time that we've all just come through. So without further ado, I'm going to go ahead and get us started here. Larry, help me out with the mic here. Here we go. All right, so everybody on here tonight, I'm excited to be able to tell you, you're going to get a cool little thank you. So that's a picture of what's going to get mailed out to each of you as our way of saying thank you for joining us here tonight, and kind of on our theme here of the night of this summer of freedom and prosperity, to give you a little thanks. And I want to say, you know, I know for me here, I just feel so blessed to be in this time here, to be here with you guys tonight. You know, coming out of a great, you know, 4th of July that I know I had with my family, and hopefully you did with yours. We are so blessed to be in this amazing country. Everybody here, if you made it here with us tonight, have a tremendous amount of prosperity in your life. And, you know, we're very blessed and thankful to have you with us tonight. Thankful and blessed to have so many of you as our investors and partners. And I'd like to have just a quick cheers to all of you, especially here to our investors, and hopefully to many of you who will become investors after learning more about us tonight. So cheers to everybody here tonight. All right, so I'm going to get rolling here, and I'm going to first start off here with telling you a little bit about. Larry, have me with the remote here a second. I'm going to first start off here with telling you a little bit about us here at DLP, especially for those of you who haven't been with us before. I'm going to give you some insights to who we are as a manager. When I think about making an investment, any type of investment, there's two things that I think are really, really important. One is the manager, who's in charge and who am I trusting my capital with to execute, especially in turbulent times like we've all been living through. And then second, what is the strategy? What is the strategy we're executing? Is that strategy going to make sense here into this next year, next few years, over the horizon of your investment, especially again in this new environment with some new volatility, potentially heading into recession? Will this strategy stand up in the times ahead? And I'm going to walk you through here tonight us as a manager and why you should be confident in us and trusting your capital with us. And then what are our strategies and how they're going to handle this time ahead. And then recap you on how we've actually performed over this past quarter. So first, a very quick bit about myself. I've been in real estate here now for 14 years. I founded DLP in 2006. Since that time, we've closed more than 15,000 real estate transactions, including acquiring more than 15,000 homes and apartments. Currently, with our investors, own more than 10,000 single-family and multifamily rentals. Won lots of great awards for our growth and our success, which most of that credit goes to our team that you're going to hear about here momentarily. And I'm also the husband of my wonderful wife, Carly. You'll see on your screen there. We have two boys, Donnie and Alex. Hi, Donnie. Hi, Alex. They're at home watching right now, hopefully being well behaved. You guys may be able to see them on video. But we live here in St. Augustine, as Larry said, and really, really proud of you know, amazing family here in my actual immediate family and the DLP family I'm going to tell you about here momentarily. So this is the family of DLP companies we have. DLP Real Estate Capital is our parent business. That's the umbrella company. And then all the companies you see underneath that are all responsible for executing on a different part of our investment strategy. Each of these companies are really critical for us to generate the kind of consistent returns you're going to hear about tonight. Those consistent returns and that family of companies has helped us amass these numbers. This past year, we've sold over 2,000 properties through our real estate brokerage. We now have 925 investors, many of which you are with us here tonight. Larry's tasked with a really important priority this quarter of getting us to 1,000 investors. Hopefully tonight's event will help us get there, which will be a pretty cool milestone. We're going to do something special for that 1,000th investor for sure. We have over 500 loans out to active real estate operators that we're funding them on the purchase and improvement of residential real estate, which we'll talk more about. As I mentioned earlier, we own over 10,000 rental units ourselves with you as our investors. We have 950 million in assets. And those of you who've been following us for a while, see every time we talk to you, that number goes up. And it was just a few years ago, that number was a few $100 million. And again, this quarter, we will very likely break the $1 billion in asset mark, which is a pretty cool milestone. We did over 100 million in revenue last year. More importantly, we provide housing to more than 25,000 residents. We support more than 200 entrepreneurs with the capital and knowledge we provide. And we now have actually over 375 team members here at DLP driving results each and every day. For this growth that we've had from where we started back in 2006 to where we're at today has helped us to win some pretty cool awards. Earlier this year, we won the 142nd fastest growing company in the Americas. And we are, yes, ahead of Uber, Tesla, and Netflix, which is pretty cool, as we all know the explosive growth those companies have had. We've also been one of the Inc. 5000 fast growing companies. And I know they told us, Patrick, we can't say this yet, but for the 8th straight year, we found out earlier this week, we are officially on the list, which is a very, very rare feat to maintain the consistency of growth year after year after year. And you're going to see that that consistency in our growth has led to very much similar consistency in our returns. At DLP, the reason we've been so consistent, we've been able to grow and execute so well is a good amount due to what you see here on your screen, the elite execution system, which has 4 components to it. It's strategy, people, operations, and acceleration. We believe we have the very best people here working at DLP, and as you get to know them, I'm confident you're going to feel the same way. This system that we run DLP on, how we execute, how we prioritize, how we run our meetings, how we run our communication, is not only how we operate at DLP, but it's also the system that we teach to the borrowers that we provide capital to help them to execute, to mitigate our risk and help increase our returns, help them grow, and in turn, help us grow. I just wrote a book actually on this topic called Building an Elite Organization, which once it comes out later this quarter, we'll certainly provide a copy to all of you as well. We're a purpose-driven organization. Our purpose here is Dream, Live, Prosper, which is what DLP stands for, passionately creating prosperity through real estate. You see our 10 core values on the screen there. One that's pretty important to you as investors, I'm sure, is stewardship. And our mission here at DLP is to lead and inspire the building of wealth and prosperity with our partners, which is you, through our relentless execution of innovative real estate solutions. And that's what our investment strategies are all about. This is the amazing senior leadership team we have here at DLP. You see Rich and Larry sitting here with me here tonight. I actually have Scott Jones sitting behind the camera here, working IT with us, and many of these other leaders in the office with us right here in St. Augustine, many of them in our Bethlehem office as well. These are the leaders who drive results through our various business units and functions throughout the organization. These 4 gentlemen here are senior leaders in DLP Capital Partners in our fund management business. Bob Peterson, our Chief Financial Officer, Barry DeGroot, our Chief Legal Counsel, and then Rich and Larry leading up our capital team as Managing Director and Head of Investor Relations. This is the team that really makes things happen in DLP Capital Partners. No offense, Larry and Rich. These are the team members you guys have probably talked to a number of times. You've been in communication with us. These are the team members who provide the day-to-day support, provide the accounting, maybe most importantly, make sure your distributions get out to you each and every month on time. Amazing team there that drives results for our investors. This is where we operate. So we're talking to you from that top middle building right there. We're right underneath, right through that front door on the left there is where I'm standing as I'm talking to you right now. It's our Southeast headquarters. Still, our primary headquarters is in Pennsylvania, in Bethlehem, Pennsylvania, where more than 100 of our team members work in the top left. We have a small regional office in North Carolina, in Asheville, North Carolina. And then we have some hubs down at St. Augustine Beach, Daytona Beach, and up in the Poconos as well. So what do we do at DLP here? We invest in residential real estate. We invest in housing. We do so by acquiring, managing, and building single and multifamily communities, and by providing loans to other investors to do the same. We run these 2 strategies in a couple different funds that you're going to hear about here tonight. First, I'm going to start off with the acquisition of real estate, the direct ownership of tax-sheltered real estate investing. What we're investing in is rental communities. These are mainly multifamily communities, but we also own single-family communities as well. We really focus on owning communities that are affordable for the people who live in that market. That's the really best way to summarize how we invest. We're investing in apartment communities, single-family communities where our rents are affordable to the majority of the people who live in that area. That's the real test, I believe, of a sound investment strategy, especially here in the world of real estate. And it's why we've been able to fare so well through this COVID environment, and why we will through any recessionary environment ahead, which we'll hear more about. We do this mainly in secondary and tertiary markets, meaning we don't own many properties in the Miamis, the Dallas, Texas, the Charlotte, North Carolinas of the world. Most of our assets are in smaller markets where there's less competition and even greater demand for affordable housing. And the majority of our housing is in the South, in warmer climates, in areas, most importantly, where population growth is, where people are choosing to move, both for work and for lifestyle. So largely, we're buying 200 to 500 unit communities, coming in and improving those communities. You'll see visually here in a moment. This shows you where our properties are located. So you'll notice we're in a lot of places. We're in about 20 states now is where we own communities. But you'll notice a lot of those little markers are here in the South, in the Carolinas, in Georgia, and Florida, and then out into Arkansas, Arkansas, Mississippi, Alabama, and then we're out as far as Oklahoma, Utah, and Arizona as well. And then, of course, we still own many properties. You can't even see all the markers in Pennsylvania, where we're headquartered as well, and as far north as South Bend, Indiana. So our process of acquiring these communities, and we've acquired somewhere around 70 apartment communities over the past 5 years. And how we go about acquiring these apartment communities is a really, really rigorous process. We have a large team here in St. Augustine, majority of the team of analysts, underwriters, directors, focusing on building relationships with sellers, banks, auction houses, brokers, bringing in opportunities to buy, fully underwriting those properties, going out physically, walking the communities, every unit, walking the competitive communities, getting to know the markets, doing a lot of demographic studies, putting out offers, fighting through that process, doing full inspections, bringing engineers out, bringing outside appraisers out, bringing contractors out, spending hundreds and hundreds of hours to get to the point that on a good month, we buy one apartment community. On a great month, we buy two. Then buying properties that we believe we can come in there and extract and add value through better management, through physical improvements. We can drive up the income and in turn drive up the value. So this gives you an example of a community that we did just this on. This is a community that was called Merritt Landing in Brunswick, Georgia. And you'll see on the left what 40 of these apartments looked like when we bought it. 40 apartments were completely down to the studs, and some had some leftover cabinets, as you can see there for us, and some paint on the floor. That's what a lot of this community looked like when we bought it. We came in and put $1.1 million into renovating the apartments to what you see on the right, as well as cleaning up the exterior and driving up management. We rebranded this community, as we always do, to either a dream, live, or a prosper community. We came in there and drove up performance of the property. When we bought it, it was bringing in $53,000 a month in income. When we sold it just 2 years later, we were generating over $100,000 a month in income, meaning we more than doubled the income. And in turn, we nearly doubled the sale price. We bought it for $5.2 million in July of 17. We sold it for $9.75 million in July of 2019 for an annual return of 30%. In the past 18 months, we've sold over $200 million worth of apartment communities like this. And most of them have generated these kinds of returns, this kind of performance by coming in there and improving the physical asset and improving the management as well. This is one of our more recent acquisitions. This was in late February. This is right near Charleston, West Virginia. This is 340 units. You'll notice these are nicer, newer apartments than what I just showed you, but it's very similar business model in that we're going to be able to come in here and drive up increased income, drive up increased revenue, lower expenses, and in turn, increase value. And again, even though the rents here are higher than they are in Brunswick, Georgia, and the community we just covered, the rents here are still very affordable for the local market incomes. And we're at around 20% affordability, meaning the average income is 5 times our rent, which is where you want to be. There's some pictures of some of our other communities. We own a range of properties that if you were a real estate investor, you would call C and B and A properties. You'll see we have a wide range of C and B and A, majority what most would consider B properties, affordable, workforce, $800, $900, $1,000, $1,100 a month apartments. On average, less than $900 a month is our average rent across our portfolio. That's one side of our investing in communities, improving the value, improving the management, driving great cash flow to you as investors, which is sheltered from tax, and then generating really great IRRs when we exit these properties. The other side of what we do is we lend money to other real estate investors, often with very similar strategies. We're doing very short-term loans, 6 to 12-month loans. These are first position loans backed by real estate. These are largely bankable investors coming to us for our ability to execute and move quickly. These are good news loans, meaning people are buying properties to make a profit. These are single-family homes and apartment communities, the same types of assets that DLP has a tremendous background and experience in. You'll see some stats here on the screen here. We've done now actually over 2,000 loans. We've had no losses to investors on any of these loans or to the fund on any loans. We've done, right now, we have diversification now of over 500 loans. On average, we're at 71% loan to cost and 54% loan to value, meaning there's a ton of equity in these properties above our loan amount and a lot of cash, a lot of skin in the game by our borrowers. This is what a borrower looks like at DLP that we lend to. Our average borrower has over a 700 credit score. has over a $3.5 million net worth. This is our average borrower, has completed more than 25 real estate investments, and has over $500,000 of liquidity of cash. And they're personally guaranteeing these loans as well. In addition, since COVID, we've instituted 6 months of prepaid or interest reserves as well to further insulate ourselves from reduced risk in any volatility ahead. Again, as I mentioned before, 54% loan to value, 71% loan to cost. That's our average across our portfolio. And since COVID, we've actually gotten even more conservative on our leverage. Our average loan pays off in under 10 months. These are very short-term loans. We're not taking long-term risk in these loans. They're short-term for the purpose of acquiring, improving, and then either selling or refinancing us out. The short-term nature of our lending also provides amazing liquidity to you as investors, which we'll talk more about in a moment. This is where we lend. But similar to where we own properties, our lending footprint, actually where we do our loans, is very, very similar. We're heavy in the Southeast. We're heavy in Pennsylvania. We're heavy kind of east of the Mississippi. Right now, again, over 500 loans across more than 80 markets in more than 20 states, out to well over 100 different borrowers. We mitigate risk in this lending in addition to great borrowers, low loan to cost, low loan to value, by getting third-party valuation, third-party appraisals, getting third-party physical inspections done before we fund loans, holding back all the money it takes to renovate a property, and only releasing it as we inspect the property and get physical proof of the renovations being complete. In addition, there's nothing we lend on that we don't have tremendous background and experience doing ourselves. We've flipped more than 1,200, well more than 1,200 homes. We've owned many hundreds of single-family rentals, likely into the few thousand single-family rentals now at this point. We actively own more than 10,000 rental apartments. We've bought and sold more than 15,000 homes and apartments. We actively right now do all of these strategies and have in-house property management, construction management, asset management. Puts us in a great position not only to underwrite risk, but then to mitigate risk if we have to step in any way. Let me give you a couple examples of the types of loans we do. So this is a property in Columbus, Ohio. Borrower came to us looking for a loan for $235,000, $234,675 to be exact. They bought this property, and including the purchase and the renovation, their costs were about $280,000. We did a loan based on our appraised value at 67% loan to value, which is actually on the higher end of what we lend at, 12.99%. This borrower had done 4 flips in the past year, had great credit, great liquidity. You can see here on the pictures on the right, the amazing job they did. And they sold this home for over $100,000 more than our appraised value. They sold it for $435,000, making well over $150,000 gross profit. And that was, I think, the 5th property that we funded with this borrower, and are doing more with them as well. As the majority of our borrowers are repeat professional borrowers. We're doing this again and again and again. Here's another one in Somerville, South Carolina. Borrower came to us for a loan for $132,000. This was a repeat borrower as well. We did a loan at 58% loan to value, 9.99%. This was what we consider to be a top tier repeat borrower, had done more than 30 flips already. This was a ranch style home. You can see the pictures on the left, kind of just a dated house. And you can see what they did on the right. What I love, you'll see a lot of our borrowers here, they do an amazing job, not only on the construction, but fully staging the house, really making it shine, as you can see in those pictures. They bought this for $155,000 in January of this year, and through COVID, renovated this house and sold it for $233,000 in June, less than 6 months, about 5 months. With that said, that gives you a quick overview, broad overview to our investment strategies. Let me tell you how you can invest in these strategies, how our investment funds work. So first, I'm going to talk to you about our flagship fund, the Dlp Housing Fund. This is a $1 billion evergreen REIT. What we invest in is the acquisition and management of affordable rental home communities. Primarily, these are Class B value add apartment communities, like many of the pictures you saw a few moments ago. Some of the great highlights to this fund. The fund already owns nearly 5,000 apartments, over $200 million worth of assets. We pay out monthly distributions to you as investors. You can reinvest those distributions every month like most investors do, or you can take monthly cash flow. You get amazing tax shelter in that the majority of the income we produce and distribute to you is going to be deferred from tax through depreciation. We go through a rigorous process of evaluating all of our assets each and every year and updating the value of our underlying assets, and then in turn providing you with the option of exiting out of the fund based on that updated value, adding more money to the fund as well at that updated value, creates the ability for you as an investor to have liquidity, which is very, very rare in a real estate equity fund, that you don't have to stay in the property for the full duration of how long we own the properties. You get to exit on when the timing is best for you. And of course, this is our 8th fund. We're very experienced in running funds. And as you'll hear us say maybe a couple more times tonight, we've had no losses to any investors. We've exceeded our investment returns in all of our funds on every period, never missing a preferred return. Here's the structure of this fund in terms of returns. So we have a 6% preferred return. That's 6% you earn before we earn anything. And I promise you, if you look at 100 funds, assuming none of the other 100 are any of our funds, you won't find another fund where the manager actually defers their management fee to your preferred return, meaning we don't even get a management fee, which is how we pay our bills, how we pay our salaries, our management fee. We don't even earn a management fee until you get a preferred return of 6% distributed to you each month. Then we get our management fee, and then you continue to get 80% of the profits until we get to you to the target return of this fund, which is 12% annual net return to you. After we exceed that return, which is absolutely our target, we then will get a 40% of the profits, and you'll continue to get the majority, 60% of the profits above the target of 12%. You can invest in this fund and all of our funds via an IRA, through a Charles Schwab, Fidelity, through a self-directed IRA, or of course you can invest non-qualified money as well. This fund is very, very tax advantageous for a number of reasons, including depreciation. And then a really big point, I think, of this fund that can't be highlighted enough, and this is the same across all of our funds. When it comes to our real estate portfolio, my family owns, we as a general partner here of the fund own more than 40% of our real estate portfolio. We are by far our largest investor. And even though this is a $1 billion fund, we've committed to investing at least 5% of all capital. Right now, today, we have over 20% of all the capital in this fund. So we are heavily invested in these assets right alongside our investors with the same focus on generating the best risk-adjusted returns to you, as for ourselves and our family at DLP. We have audited financials through Cohen Resnick. We have a great law firm, Stewart & Kissel, as our legal representative. We do quarterly reporting in this fund as well. All right, so that's the owning real estate side of our business. That fund will do a small amount of lending as well, which helps give it great liquidity as well. But our main lending fund here is the Dlp Lending Fund. We also do have the Dlp Income and Growth Fund, which is a very similar fund here, focused on short-term bridge lending like we just talked about. This fund here, the Dlp Lending Fund, has been open now nearly 6 years. This is its 6th year, I should say. We've been open since 2014. Every single year, we've generated over 11% returns net to investors. Our average return since we started the fund was 13.7%. That's not a compounded return. That's a simple interest return, assuming you took all your distributions every month, which you have the ability to do. In fact, we pay out 2 distributions a month. We pay out a
We lost you.
Yeah, hang tight, everyone. I think we're gonna work through some tech issues here and at St. Augustine. It looks like Don's camera went out here.
So here's the structure of the fund. 10% preferred return. That's 10% you earn before we earn anything, including, again, we haven't earned our management fee until you at least get a 10% preferred return paid each month. The overall return target of this fund is to generate at least 10% return, but we've generated over 11% every month, over 12% almost every month. And then once we hit our target return, we continue to give you, or once we hit our preferred return, we continue to give you 80% of the profits, and we earn 20%. Here's the performance of the fund over our history. Again, 13.7% return, historically over 12% return in most periods. Lastly, I'm going to touch on the DLP Positive Note Fund. This is actually not this exact fund, but this exact structure is how we started managing capital more than a decade ago. As investors started coming to us and we started providing them with fixed notes. We do this now through the DLP Positive Note Fund, our newest fund. It's a Reg A fund, which gives extra security regulation, audits. In this fund, you're coming in, you're actually lending money to the fund instead of being a partner in the fund. And in turn, you get a fixed return on your investment. That return is guaranteed by DLP, not guaranteed by the FDIC, but we're signing an agreement guaranteeing to pay you this return that you see on your screen there. So based on the amount of money you invest and the amount of time you choose to commit, that return will be a fixed return between 5 and 10%. You have the ability to take those distributions each and every month or let it compound and grow. You let it compound and grow, those returns get even higher. You can use the simple rule of 72 to take that interest rate, take 72 divided by the interest rate and tell you how long it'll take your money to double if you let it compound and grow. An amazing ability to be able to look out and say, all right, I'm going to know exactly how much money I'm going to have in 2 years, 4 years, 6 years, 8 years. Is a very comforting feeling, especially in these volatile times. That 90-day note option is an interesting option in that it's not actually a 90-day note. It's actually an evergreen note that you can redeem at any time with 90 days. It gives you great liquidity while earning interest rates way better than any CD, any money market account, while still having liquidity and having a fixed return. It can be a great way if you're new to us to get started, to get some capital invested, know exactly what you're going to return, what your returns are going to be. And again, in this fund, like all of our funds, you can invest via IRA, qualified money, as well as unqualified money as well. As I mentioned before, we have a track record, no losses, no months of missing our return targets, missing our preferred returns. And we've generated double-digit returns in all of our funds to all of our partners or equity investors, exceeding our return targets in all of our funds. Because of that great performance, as well as I think as much as that, the focus we put on communication, the focus we put on transparency, the focus we put on delivering wow to you as investors, we've grown from 2013 having 33 investors. And I would bet today, I don't know this is a fact, but I'm gonna make sure I know this is a fact next time. I would bet you at least 32, if not all 33 of those investors are still with us today. And I bet you a number of them are on here with us tonight, to now having over 925 investors expecting to break our 1,000 investor mark this quarter. We continue to raise capital. In fact, last quarter was our biggest capital raise quarter ever. And I want to thank all of you to that. The majority of that capital came from our existing investors investing more capital with us. When they saw the volatility and stress in the market, they wanted to double down on their investments with us because of the confidence in us being able to continue to generate returns despite the volatility we're facing. Here's some successes here. So I'm going to move into what happened this past quarter. So no better way to judge what we're going to do in the future, right, than to look at how we're doing in the most recent past. So I'm going to talk about some of the successes here going on at DLP this past quarter. And then after that, we're going to open up to Q&A, and then we're going to do our raffle, give away a vacation, and then we're going to do some breakout groups here and give you the ability to ask some one-on-one questions that you might not want to ask in the big group setting, which we certainly encourage you to do so. And you can be typing those questions into the chat box right now as well. Any questions you have, we'd love to have those coming in so I can start tackling them in rapid fire here in a few minutes. Sorry, some recaps here in Q2, and our Q2 DLP capital reporting will be going out in the next couple of days, which will give you all these details and more. We had $35.8 million in capital raised into our funds in Q2, which was our best fund capital raise quarter ever. Considering that happened over COVID-19 is pretty astounding. And again, I can't thank our investors and their confidence and support enough. We took that money, we funded 135 loans for just under $30 million, including doing over 25 new lines of credit to experienced real estate investors for over $43.5 million. This past quarter alone, we won some pretty cool awards. I touched on some of these a little bit earlier. Fastest growing company in the Americas. We won awards called the Stevie Awards, a couple cool awards there. Again, just last week, Patrick told me I'm not allowed to do this, but I did it anyway. I updated it to our 8th straight year. We've been one of the 5,000 fastest growing companies. We've grown by more than 60% every year. And then we just a couple weeks ago were named the #7 top real estate team in the country. This is our top ranking ever. #1 team in all of Pennsylvania and New Jersey. Again, pretty cool honor for sure. We brought on some great people, and that's one of the biggest things. I know a number of you guys on here are entrepreneurs, own your own companies as well. And I think this volatile time and the fact, unfortunately, that many companies are going to struggle is an amazing time to bring on tremendous talent. And we've certainly been taking advantage of that here at DLP and bringing on some really great talented people. So in Q2, we brought on 6 important team members here. I should say we brought on many important team members, 6 important ones I'm going to talk about tonight. Scott Myers, our head of sales for DLP Lending, is going to do a great job of growing our sales and our revenue for DLP Lending, continuing to grow as you guys continue to put your trust and invest into our lending strategy. Scott Jones, the man behind the the camera here per se tonight is our SVP of Technology. Joined us here back in March as well. Rick Montgomery, our new head of construction and service quality, helping us drive our value add strategy throughout our communities. Shayna Whitehead, our new VP of Property Management Operations, driving our day-to-day execution, our portfolio. Neil, our Director of Capital Markets. And Brett, our new Investor Success Manager, newest member to the Dlp Capital team, to provide you with great service. I probably should have been going through their slides as I gave you that. I forgot a little bit about the upcoming slides here. So you can read a little bit about them here and hear their background. Really, really amazing backgrounds, great also cultural fits, and people who already just a few months through some crazy environments have been driving some pretty amazing results. Scott grew a lending business similar to ours, but I'll give him credit. He grew it bigger than we've grown ours yet. And we're looking forward to him bringing that skill and that ability here to Dlp Lending. Scott Jones, our SVP of Technology, got a deep, deep background, not only in IT, but in real estate. He's worked for some really big, successful real estate companies, such as RAM Realty Advisors there, and has already made a major impact in helping us leverage technology to be more efficient, more effective, drive better service results, speed to you as investors, as well as our residents and clients. Rick Montgomery, our head of construction service. He worked as a head of construction for a company called Resource Residential, was managing a portfolio of over 23,000 apartments, and previously worked for Aimco as one of the heads of construction to a company that at one point had over 200,000 apartments. Avalon Bay, these are some of the biggest and best known management companies in the world, and brings a great level of expertise and knowledge and ability to execute here to our construction team. Shayna, our VP of Property Management, team member we've been working to recruit for a couple years now, and has worked for some incredible companies such as Trammell Crow, Invitation Homes, deep background in both single family and multifamily management. Another point to mention that's pretty cool is Shayna, Rick, Scott have all moved and are in the process of relocating right here to St. Augustine from all over the country. And Scott, this is news to some, will be here in St. Augustine starting in August as well, which can be pretty cool. Scott Myers. So bringing great talent here to our corporate team. Then we have Neil Campbell, our Director of Capital Markets, worked at JLL, one of the biggest real estate firms in the world. Great background in understanding capital markets, helping us bring in the most cost-effective capital to help us maximize our returns to you as investors. And then last but certainly not least here, we have Brett, our newest Investor Success Manager, joining Bob, Larry, Mike on the Investor Success team, along with, of course, our great coordinator team of Mandy and Lisa and Julia. So continue to bring great support so we can continue as our investor base grows, provide you with the same level of service you've grown accustomed to, and hopefully even take it to the next level. Here's what you care most about, I know. I know all that was great, but let me tell you what's even more exciting. So, all right, so here's our fund performance. The Dlp Lending Fund quarterly report performance was 11.17% annualized net return net to you investors. Considering we were in a COVID environment where we had access to no leverage, we had to sit on more cash and went through an amazing volatile time to generate 11.17%, we feel very proud of. And I'm going to knock on wood as I say this, we did not have a single one of our borrowers go into default through all of COVID. So we've all heard in the news, nobody's paying their mortgages. Every lender's offering forbearances. No forbearances, no deferred interest payments. All of our borrowers made all of their payments. Shows the quality of borrowers we work with and the relationships we build with them. Dlp Income and Growth Fund, very similar fund to the lending fund. We generated 12.59% annualized net return, drastically exceeding the return target as well. And both of those quarterly reports went out to you guys today. So they'll be in your email box if you haven't already seen them. Dlp Housing Fund, our newest fund, has achieved its 6% preferred return. We distribute out the preferred return on a monthly basis, and then we distribute everything above that on an annual basis with a target, which we are well on track for, of our 12% plus annualized net returns to you as investors. Dlp Equity Fund 2, very similar, has a 7% annualized preferred return, which we've achieved and hit and distributed to our investors, and is well on track actually to wind down here in the near future and generate really great returns to our investors. Dlp Fixed Fund, a long-standing, call it family and friends fund we've had for many years, generated 12.15% annualized net return as well. Very similar fund to Lending Fund Income and Growth. And then all of our fixed return investors, of course, received their fixed rate that their notes are locked in at this past quarter, as they have every quarter and every month since they invested with us. Another great accomplishment here this past quarter is we took over the management of over 2,000 apartments, or I should say nearly 2,000 apartments, just under, throughout South Bend, Indiana, Tulsa, Oklahoma, and Little Rock, Arkansas, as well as Shreveport, Louisiana. These were apartments that we were managing with a third-party firm because we were new to these markets. And we made the decision that we were ready with bringing Shana aboard, with Melanie aboard, with Rick aboard, with the great leadership team we built to take over this management of these assets. And we've already seen some pretty great improvements and progress for us taking this management in-house, further building our team, welcoming more than 50 new team members, a part of that takeover as well. So a little update of what's going on in the real estate market. Up until COVID here, the residential rehab new construction market was incredibly hot. We were breaking all-time transactional volumes in terms of homes being flipped, investment transactions. That transactional volume, of course, did slow down due to COVID. COVID caused some states to stop construction altogether, caused stop real estate sales in certain markets. So that creates some level of slowdowns. But there was an even greater decline in inventory due to COVID. We were already in many markets the lowest inventory of housing, both for sale and for rent, ever in many, many markets. And that record has now been slashed in some cases by 30, 40, 50, 60%. Incredible low inventories. And this has led to home values actually going up. Actually, year over year, home values have gone up about 5% in Q2, in the middle of COVID. And we're seeing homes selling for more than asking price, multiple offers on the majority of homes in many markets. Our borrowers selling their properties for more than they expected. And even on the multifamily side, we thought there might be some decline in values. Cap rates may go up. It's not happening. There's even more money wanting to go into this asset class than ever before. And the reason for that is the fundamentals remain very strong. Fundamentals of affordable housing are really, really strong. There's a lack of supply. Demand drastically exceeds supply for affordable housing in most markets, which is keeping home prices going up, keeping rents at least flat or going up in most cases, not to mention interest rates remain low. We've broken our physical occupancy records again and again, week after week here through COVID. We've seen as a market whole, rents have gone up about 1%, so not huge growth, but some growth. Housing values have gone up. Vacancy is about 5.5%. In the end of Q2, which is a minimal increase from Q1. We've actually seen a drastic decline in vacancy, again, having our highest occupancy ever. Again, demand for affordable housing has frankly never been better. Here's some quick stats to show you what's going on in the market visually. So sales volume in Q2 went down, mainly because in many states, sales were very difficult. You couldn't show homes, it was hard to sell them, et cetera. Supply, these are the expectations in Q3 versus year over year. So we still expect sales volume to be down over last year, again, due to the drastic reduction in supply. Compared to the supply in Q2, supply will rise. People are putting their homes on the market, just not fast enough for demand. Although prices have been going up, we're going to predict prices stay flat. Will not at all be surprised if flat prices continue to rise, both for sale and rent prices. Interest rates, we expect to stay flat, stay incredibly low. Rental occupancy, we expect to continue to climb in the affordable sectors. And again, we expect rent to stay flat. But again, in our portfolio, our rents are going up. We're getting growth still. But as a market whole, we're conservative in that rents will be flat. So in terms of how that affects us at DLP, we expect Q3 to be our biggest capital raising quarter ever. Coming off our biggest capital raising quarter ever. We expect to surpass that quite a bit here in Q3. Again, thanks to you. Hopefully you guys will help prove us right. And we expect to then take that capital and be able to deploy it into some great multifamily acquisitions, some rental community acquisitions. We expect on the properties we buy to see in the neighborhood of a 10% discount to the pre-COVID pricing, despite how strong the market is. We expect to fund more than $100 million in loans and lines of credit this quarter to many of our existing proven borrowers, as well as welcoming new proven experienced borrowers as well. We expect to exceed our return targets once again in all of our funds. We are not reducing our targets in any funds, not the short-term horizon of the expected distributions or returns, or the long-term yield targets, such as the Dlp Housing Fund's 12% target. We are more confident today than we were a month ago, or we were 2 months ago, where when we launched each of these funds and our ability to continue to exceed these targets. Expect to bring in 45 million of new capital here this quarter across our funds, across the Housing Fund, Lending Fund, and Positive Note Fund predominantly. So with that said, we're going to get the opportunity here to talk to a couple of our existing investors. So we love getting normally to do this live. We're going to adapt here and do this a bit virtually here, which Larry, I believe, is going to take us away here and talk to a couple of investors, get you a chance, not as good as sitting next to them maybe, but get to hear a little bit from some of our great investors. So Larry, floor is yours.
Awesome. Thanks, Don. And what I'd love to do here now is introduce Dan Spears, who's here with us on Zoom. He is here in St. Augustine, Florida, although not here in the office. So Dan, thank you so much for joining us tonight.
Yeah, thanks for having me, guys.
Awesome. Well, Dan asked me to not ask any particularly difficult questions, but I would hope that these are easy and good questions for you to answer here tonight. So the first thing I wanted to ask you, Dan, is how did you first hear about us here at DLP?
So I was introduced to DLP through one of your other investors to begin with, and I came to a couple of the investor dinners to hear about the program, learn a bit about the program while I was kind of doing my own due diligence, on the side, to be honest.
Awesome. And thank you for that. I know, that's something that we don't, I think, focus on enough, is that so many of you as investors have come to us as a referral from others. And so that's the biggest testament to your faith in us. And obviously, we are so thankful for that. And Dan, we were very happy for you to come our way. So that's wonderful. Thank you. So in terms of, you did some really great intense due diligence. I know we had spoken a number of times and met a number of times before you pulled the trigger, so to speak. So what was, if it could be one thing, what was the one thing that caused you to move forward with us and decide to actually invest?
I think it's actually a couple of things, Larry. First and foremost, I really like real estate as an investment vehicle. I own a couple of rental properties myself and manage them myself. So, the real estate portion of it was attractive for me. The ability to invest in real estate passively was probably the number one reason why I pulled the trigger with you folks. It's been very consistent. I liked DLP's discipline, if you will, in the way that they approach their lending and that sort of thing. So there's a lot of reasons that why I came forward, but first and foremost, I like real estate as an investment vehicle.
Awesome. I would give you a layup here, Dan, and ask if investing in your own properties or investing with DLP is easier, but maybe we'll skip that question for here tonight. But thank you again for that. So, sure. All right. And I just have one more for you here, Dan. We'll let you off the hook here a little bit easy, but what would you say to someone who perhaps is on this meeting that's considering investing with us, maybe hasn't pulled the trigger yet, but is looking to invest with us?
So I'll start off by saying that I am one of the world's biggest skeptics, and I would encourage anyone who's interested to try and find a negative report out there on DLP. I was not able to find anything. It's been probably the most consistent investment in my portfolio today. And, these returns are coming in at pretty close to 1% a month, every month. And, I took advantage of the compounding option. So, that just continues to grow and bake. And so, I would just recommend people do your own due diligence, get to know these folks, understand the business model, and make your own decision.
Awesome. Well, Dan, thank you so much. And to that point, we will, of course, as we mentioned earlier, have some breakout rooms afterwards with us to answer some additional questions, as well as our Q&A here. But thank you so much, Dan. It's great to have you with us, and looking forward to many more years of prosperity for sure. So thank you very much.
Me too. Thank you
for being with us. Awesome. So with that said, I'll turn it back over here to Don.
All right. Thank you, Larry. Appreciate it. Thank you, Dan, very much for the kind words. I want to tell you about a couple upcoming events before I open up the floor to answer your questions. So we have another virtual event, August 13th, about 4 weeks from today, 4 p.m. Eastern. Many of you remember we were doing these Today's Market Investments events every single week. We've kind of moved to doing them on a monthly basis now. So next one will be August 13th. We'll give you lots of updates of what's happening. And I have no doubt with how active we are right now, we're going to have some great updates to share on the acquisition front, on the lending side, et cetera, come August 13th. So please join us then. Then we have some, hopefully, and we are absolutely expecting these to be live events, physically live events, which we will also stream virtually as well. The first one here, I should say, in Asheville, we'll be doing an investor live event there like we did actually in June. But this will be a formal dinner event, our first live formal dinner event in some time. So we'll be welcoming and serving dinner to those of you live, and we'll try to figure out something cool to do for those of you joining us virtually as well. And then November 12th to 15th, I just want to highlight this year, and you'll hear lots more about this, but here in St. Augustine, we're going to be holding a couple unique events that are going to overlap. So first, we're going to be having an event for our elite members, which are basically our best borrowers who we're helping them grow and scale their business. We help teach them about our elite execution system, help them grow their businesses. We're going to kind of intertwine that event with the kickoff event for something that's brand new here at Dlp. You're going to hear a bit about coming soon, which is going to be our Prosperity membership, Prosperity Family Wealth and Legacy membership, which is a unique new membership platform we're going to launch for those of you as investors who want help in really building prosperity in all aspects of your life, who want help in estate planning, tax planning, philanthropy, want to grow and learn and expand themselves and improve themselves in all aspects, not just from an investment standpoint, want help in planning the transitioning of assets to your kids and so forth. It'll be a really amazing group, really amazing organization that will be doing our first big kickoff event over this weekend in St. Augustine. And we're going to do that right before we do our normal Inner Circle retreat. And our Inner Circle group, for anybody who's curious, we have over 130 Inner Circle members today and growing. To become an Inner Circle member here at Dlp, you have one or two ways you can do so. Either A, you invest $1 million plus with us, or you refer us to investors and help us grow through referrals. So if interested in being part of the Inner Circle, getting the benefits of coming to some really great events like this, having us wine and dine you, take you golfing, have fun, biking. We do all kinds of cool things, as well as get access to our cool vacation properties and many other benefits, and just also network with really awesome people. I encourage you to reach out to Larry or Bob or Mike or Rich or Brett. And then we're going to be we've started a new association or institute called the American Institute of Investment Housing. We're focusing on providing education and resources to the world of investing in investment housing, single and multifamily. So we'll be doing an awards event then as well. So you can tell we're going to have a pretty busy weekend over those few days. I probably won't be able to respond to many of your emails or other requests, but hopefully you'll be with us live, spending some time with us over those few days. Can't wait for it. And you'll hear more of that coming up. So with that said, we're going to do a raffle right after Q&A before we do breakouts, where you can go stay at one of these cool properties here in St. Augustine, Florida, at the beach. We have some beautiful, $1 million plus beach houses. Our downtown Asheville property, where I just spent with my family 6+ weeks at, which was really awesome. I like to golf, like St. Simon's Island. Never been there. We have your choice of ocean or golf assets there. Or you can stay in our newest property, which is in downtown historic St. Augustine. If you haven't been to historic St. Augustine, it's absolutely worth the trip. So stay tuned for that. And with that said, we are opening up the Q&A here now to take in live questions that you've been typing in or are about to send in to us.
Excellent. Thank you very much, Don. So we do have quite a few questions in the queue, but we ask you to continue to drop them in there. We'll continue to take them live. And any other questions you want to hold off, we will have the breakout session after the raffle. So with that said, we're going to start off with a question from Jeff. It's Dlp in an area where there's been looting and rioting and demonstrations, and has any property been damaged because of it?
That's a great question. And to my knowledge, no. So we're very fortunate. We don't own a lot of properties in inner city environments. Most of our properties are secondary and tertiary and largely suburban or most would consider to be suburban environments. Frankly, probably the closest properties we had to any of those environments was our downtown Asheville vacation rental that I just showed you, which I happened to be staying in downtown Asheville during that time with my family, and our property was not vandalized in any way. But other than that, no, we haven't had any challenges related to our properties for any of the rioting or looting.
Great question.
Excellent. Thank you. The next question is coming in from Walter. Walter has a question specifically on the lending fund. He says that the June report showed 2% of loans were 91 days delinquent, but the financials show a loan loss reserve of 0.4% net of loans. Can you explain?
Sure. So yes, that's good information. So yes, we have about 2%, or I think a little under now, 2% of our loans in default. Those are loans that were in default pre-COVID, and we've actually decreased that amount. And in this business, we always have a small amount of loans in some stage of default. Generally, they get worked out through the borrower selling the property or refinancing it, and we have never suffered $1 of losses. So in terms of the question of, we have 2% of our loans in default, but we're holding a reserve account for less than what works out to be 2% of our principal. We have a reserve account for something like $800,000, something around that range. Could be slightly off, but for quite a few $100,000. We've never, ever in 6 years touched that reserve account. We've never used $1 of it because we've never written off $1 of loss. So even though 2% of loans may be in default, we're not expecting certainly have any losses, let alone to have full total losses on any loans. So that reserve account is set up to protect against any potential write-offs on a loan. But again, we've never used the reserve account. We've never had a loss on a loan across the 2,000 plus loans we've originated. Great question, Walter.
All right, great. Thank you. Question is coming in from RZ. He's asking, what is the mix of investors, institutional, retail, etc., and who are the auditors, and do the investors have access to the audits?
All right, so I will start with the last question there. So yes, you have access to the audits. They're all in our portal, dlpinvest.com. We can give you access to if you don't already have access. You can see all of our audits dating back to the beginning of each fund. So depending on the fund, Cohen Resnick is our auditor for the Lending Fund and the Housing Fund. And Bucknell Lasicki, a good-sized large regional firm out of Pennsylvania, is our auditor for the Income and Growth Fund and our predecessor funds as well. So in terms of the breakout of our types of investors, it varies quite a bit, but at the center of it, how I think about our investor base is the vast majority of the people who entrust their capital to us are people probably like most of you. These are high net worth individuals, accredited investors who built up their net worth through hard work and have entrusted that capital with us. The majority, probably about 70% of our investors, come directly to us, such as most of you likely did, through a referral from an investor, through hearing us on the radio, coming to one of these dinner events, et cetera. And then a big percentage of our same type of investor, same person, comes to us through registered investment advisors, wealth managers. They bring us investors that have entrusted them to invest their, what I would consider, ultra high net worth investors worth $100 million, a few $100 million, who invest generally their family office with us, their money that they have built for their family. And then lastly, we have some institutional investors such as pension funds, endowments, and trusts. And that is the biggest growing sector of our investor base in terms of dollars, as they tend to write good-sized checks. But we don't have any investor who has, other than myself, who has more than 1% of our fund capital. So great diversification of our investor base.
Perfect. Thank you again. Next question coming in is from Haran. Haran's question is, with freezing of rents and no evictions, how would this non-payment situation play out with your portfolios?
Yes, it's a great question. I didn't talk quite enough on. So when March came and COVID hit, I kind of, day in my mind that sticks out was March 12th, that Friday, when kind of felt like everything was shutting down and changing. Soon after that, kind of the word was nobody was going to pay their rent and nobody was going to make their mortgage payments. And that was all the talk at least in our world, being real estate guys, that all we heard about and all the questions came to us about. And of course, we, like you, had never dealt with COVID before, right? We had never dealt with that, with a pandemic environment like that. We had never dealt with the government coming out publicly saying you can't evict a tenant. We never dealt with courts being shut down, right? None of us had ever dealt with any of this before. So we spent a lot of time, effort, and energy planning, training, talking with our staff, planning on how we're going to handle things. We kept all of our communities open, and really the people here, and we talked a lot about them back in our April event we did like this, but really deserve to mention our on-site team out at our properties have just done a tremendous job. Some of us, not just us here at DLP, but probably many of you, have complained a little bit about or had to adjust to working from home, right? Had to adjust to being in our nice, cool homes and next to our refrigerators, which I know hasn't helped some people's diets, but right, it hasn't been that terrible, right, to be working from home as most. Our team, our on-site team, which makes up about half of our organization, they've had to stay out working in these properties, hearing all this noise of this deadly pandemic and having to continue to go out and service our residents, go out into these apartments, handle service requests or maintenance requests. They continue to lease, they continue to collect rent, they continue to provide value throughout our portfolio through all of this time, and have done an amazing job. So because of all that tremendous effort, and because, in part, because a lot of our competitors didn't do that, we picked up a tremendous increase in occupancy across our portfolio. So many moved in, very few across our portfolio moved out. And then the vast majority, in the scheme of things, paid the rent. So on average, we collected 94.5% of our rent in these last few months. And a good amount of that 5.5% we haven't collected, we're working on. We're on payment plans. We're working with the residents. So yes, we have not been able to evict, and we're not going to be able to evict likely. If you're my resident, this isn't the case. Just kidding. But of course, you don't want to make that known that we really can't evict right now. But it'll be until late August until we're able to evict. Those who aren't willing to work with us, those who are able and want to work with us, we're working with them, building out payment plans. But those who just are taking the approach of, well, I'm not paying you, we're having to wait, and we have those residents lined up to evict as soon as the court systems and some of the municipalities and rules allow us to do so. So that will happen likely late August as of now. But again, the majority of people want to pay the rent. The majority of our residents are good people who want to live in a safe, affordable place, who understand that there's a tremendous undersupply of safe, affordable housing, and they don't want to leave. So we're happy to work with anybody who wants to work with us and help them be able to make their rent payments. And again, the vast majority of people have done so. And then when you factor in the increase in occupancy, our cash flow has gotten better through COVID, which is, at the end of the day, pretty astounding.
Excellent. Thank you again. Next question is coming in from Shuzma. It's a typical question we get all the time, but what is the average deployment time for funds invested in either the housing fund or the lending fund?
Yeah, so first, I'm going to tell you, it varies. Anytime you're ready to invest in one of our funds, we'll give you the best understanding to what we expect it to be or how long we think it'll be. Historically, over the course of time, it takes us 3 to 4 weeks to deploy capital. We have had times through COVID because we weren't going to take a rush to deploy capital, especially in a volatile, changing environment. And because so many of you, hence our biggest capital raise quarter ever, decided to add more money with us. It took us a little longer. It took us as long as a couple months to deploy capital in different funds. But we're really excited, as we talked about in a few slides ago, really big targets in terms of loan origination, strong acquisition volume that we expect here this quarter to be able to deploy capital really efficiently. We also rebuilt in and closed on some new cash management tools, such as a borrower-based warehouse facility a few weeks ago, which is going to help us better manage cash, which has been the biggest challenge. We have to have cash so that we can fund our borrowers, fund loans when they're ready. And with that cash sitting, hurts returns. That balance of deploying capital is something that is our day-to-day biggest challenge. We understand and respect as investors that you want your money deployed quickly, and historically we've been able to do so, expect to continue to do so. And then also I'll mention as last point, we can always look to do a capital call structure for you. So if you're investing money and you say, hey, most investors, unfortunately, when they decide they want to invest with us, or fortunately, whichever way you look at it, their money's sitting in cash, they're not earning anything. So if it sits with us for a few weeks, it's not the end of the world. But if you say, hey, I'm earning good money with this capital somewhere else, we can do a capital call structure where you sign all the paperwork, get everything ready to go. You're committed, you're in order of deployment, and then we'll give you notice when we're ready to deploy. That way, you don't have to have your money sitting for a few weeks or so with us.
Great. Next question coming in from Jeff again is, how will Ron Wyden's proposal of taxing unrealized gains affect DLP investments?
Yeah, it's an interesting question. So I can't speak, educated enough on the proposal, as I've seen lots of these types of proposals over the years. I don't know this one inside and out, so I'm glad to look into it and get back to you on it. I think I don't expect, obviously nobody knows here in this room what's going to happen in November, but I don't expect to see a bill like that get approved and happen. But that's interesting thought. And what I would say is, if something like that happened, we'd be adjusting how we report on unrealized gains. The only fund that could affect is the housing fund. The rest of our funds, we only report on and only distribute realized gains. So overall, in the scheme of things for us, it wouldn't have a whole lot of effect. In the housing fund, we do value our assets each year. So we would probably adjust some of that reporting to avoid any of our investors getting undue tax. But we'll look into that a little bit more.
Great, thank you again. And then RZ has another question that goes, in various restricted states, how many of your team members are working from home, and has this impeded or constricted your business at all?
Great question. So, at DLP, we've been a Zoom company, like many of us are on right now, for quite a lot of time. And for us, because a lot of our team is here in St. Augustine, we have team down in Daytona Beach, we have team in Bethlehem, we have teams, and then throughout 19 states, we've had to operate all of our meetings via Zoom forever. I can't think of the last time I was in a meeting before COVID where every person who needed to be in the meeting was in the same room. So we're very used to operating via Zoom and operating remotely. So when everything, the state started shutting down, all of our corporate team, or virtually all of our corporate team, I should say, started working from home across all of DLP. Our on-site team members continued to work at the properties. We staggered their hours and did some things. There weren't as many there in the office, but they generally were working majority of their time still in the communities, as well as were our people in maintenance and construction, other than the state of Pennsylvania, where we were stopped from doing construction for a period of time. So overall, most of our people had to adapt to working from home. Florida came back, was one of the first states to come back and reopen. And I can tell you our team members were rushing to get back to the office and get back together. And the vast majority of our team members have been working from the office here, as well as our Daytona Beach, Holly Hill office. And then when Pennsylvania reopened, it was the same thing. Everybody rushed to get back. But because we have a larger office there, we've been staggering people. We have, in some departments, we have half people on one week, half the next week to respect the distancing rules. So it certainly caused some challenges. At the end of the day, again, if there were enough of us in the room, I'd be doing a loud round of applause here, but our team has done an amazing job of adapting, and really from a production standpoint, haven't missed a beat. I think as a leader of our organization, I've had to accept or fully recognize the fact that even though they've continued to perform and not miss a beat and provide great results to our residents, our investors, our borrowers, our clients, it's been certainly taxing, right? I'm very fortunate that I have a wife who's used to being at home with our children, and who isn't working to take care of my two boys, and I fully respect and can only imagine a single parent who's had kids at home in this environment and working from home and school shut down. And my wife happened to be a first, second grade school teacher before having our kids, so she was well equipped. But I imagine many people have never been a teacher, right? And now they went from not only working a demanding role here at DLP, but now being a teacher and a full-time provider of all needs for their kids. So they were used to being able to rely on daycare or school for that help. So, we've tried to be, and I think overall we've done a very good job of being as accommodating as possible to people's challenges related to all these issues. But I feel for myself, I need to continue to do a better job of appreciating and showing respect for the level of challenges this has caused, and in many ways, people losing all the things that we took for granted. Basic, simple things that we took for granted in our lives, and kind of getting pulled so quickly. It was very hard for many, but our team did an amazing job of continuing to operate on our mission and execute for our clients.
Amen, and well said, Don. Thank you. Yeah, we all know we've gone through that, and I think my wife and our family as well, because it was tough. So, Harant has another question. It's actually a couple of questions. So the first is, what are the risks that might make investors lose money, and under what scenarios? And then a secondary question is, where do you see DLP 5 or 10 years from now?
Sure. So in terms of losing money, I'll start and I'll put my Barry DeGroot or Chief Legal Counsel hat on and say, there's risk in everything, right? You can lose money in anything you invest in. We've been doing this now quite a long time. Now we can say we're going through another cycle, another crazy environment, and continue to not only lose money, but exceed return targets and continue great distributions. I know so many other fund managers in the same business who completely stopped distributions to their investors when COVID hit, stopped any distributions. And we didn't stop distributions for a moment, didn't even have a conversation about it through one of the craziest environments any of us have ever been through and hopefully ever will go through. So I feel as confident today that largely due to the last question I talked about of our amazing team, that we'll be able to execute and weather any environment, continue to generate great returns to our investors despite the unknowns that can come ahead as we all just have lived through. So I feel very, very confident. But I welcome you to look at our investment strategies and understand why we're so confident that low LTV, low LTC, short-term bridge lending to experienced real estate investors is going to be a great strategy, and even in a volatile recession environment. Why owning workforce and affordable housing is going to be a great place to be through a recessionary environment, and why we're going to be able to do really, really well. In terms of the second question, in terms of where we see ourselves in 5 or 10 years, I'd say with pretty good confidence that at DLP, we set clear goals to where we're going to be a year from now, 3 years from now, 5 years from now, 10 years from now than probably any other company, large or small out there. We focus very heavily on. In fact, I'm spending Friday, Saturday, and Sunday, as is my entire executive team, in a strategy session this whole weekend, evaluating any adjustments to our strategy and business plan forward, which we do in the middle of every year. But of course, this year it's extra unique with the COVID environment. But to give you a really short answer is we're going to continue to grow on the business strategy we have here today. We have no expectation of going public, of selling, of winding down, of pivoting into a different business line. We're going to continue to focus on investment housing. We're continuing to build our portfolio of owning affordable housing, continue to execute on our strategy of driving value to our residents and in turn our investors, continue to grow our lending platform. So as I look at 2030, we expect we're going to go from we're about to break the door on $1 billion in assets. We expect we're going to be at $9 billion in assets, to give you an idea. And that's just assuming a 20% annual growth each year for the years ahead. And we've historically received more than a 60%, had more than a 60% annual growth. So more of the same, I guess, is the shortest way to put it. Of course, though, we'll continue to innovate and adjust our strategy to the market changes ahead and the market opportunities ahead.
Before we go into our raffle, we have 2 more questions. The first one from Jane. If any properties were to be damaged or destroyed due to arson, looting, rioting, etc., is DLP insured for these eventualities?
Yeah, great question. So the way we structure our insurance, and we have a very large, am I muted here? Is that a mistake? Good, okay. So we have a very robust master umbrella insurance policy and a few layers to it and so forth. And short story is we've been through multiple events. We've been through hurricanes, we've been through fires, we've been through many different forms of natural disasters. And from a strictly financial standpoint, when we have that kind of loss, every case, and we've been through many, we make out financially well. We end up getting brand new apartments or roofs or different features to the property, generally at no cost to us. In addition, in our insurance policies, we have lost rent coverage, meaning if we have apartments that we have to have vacant for any period of time due to whatever the situation is, we continue to get full rent, 100% of the rent we would have had if the unit was occupied. So insurance is a very, very important tool in risk management, and one that we put a lot of focus on. Our CFO, Bob, oversees our insurance department, deep background in, and we have an entire team focused on executing on our insurance each and every day.
Last question we have here again from RZ is, are DLP properties all managed by DLP captives, or do you subcontract any management?
Great question. So we have today two communities or two locations where we have third-party management. One is in Columbus, Ohio. We have actually a third-party manager who actually happens to be our partner in that property. So we partnered with a great operator, owns about 3,000 units in that market. So they're managing the property as our partner. And then we have two communities in Vernal, Utah, that we use a third-party manager on, simply because getting to Vernal, Utah is quite difficult. And this management company has a lot of experience and local feet on the ground, and they've done a great job for us. If we ever had to step in, we'll be ready and able to. But they've done a very good job for us thus far since we bought those assets late of 2019.
Excellent. So that wraps up the questions we have right now during our Q&A. We're going to turn it over and move to our raffle and pick a winner for the vacation home, and then we'll break out into our little sessions.
Awesome. So I can't express to you how
here. We have our Wheel of Fortune here that we're looking at, and we're going to go ahead and see him spin that.
Awesome. I will do my best Vanna White and/or Pat Sajak here. So let's see. This first wheel here is for our current investors.
All right, the first wheel here is for current investors.
Awesome. So Vincent Tessie is our winner. Congrats, Vincent.
Awesome.
So that's a current investor, and now we're going to do another one for prospective investors. Awesome. So Jeff Wang, congrats, Jeff. So Larry and team will reach out to you both. Nothing you need to do. We got your names here. We'll reach out and coordinate with you a great trip for your family. Or as a friend of mine who's in the hospitality business says, what's very popular right now is people traveling without their family to get a break from after COVID. So whichever way you prefer, congratulations to you both. All right. So with that said, we're going to break into our breakout groups now. You don't need to do anything. You will automatically be broken out. All you need to do is stay on and not close your Zoom window, and we will be breaking into individual meetings with our various investor success manager team members. So with that said, appreciate all your time here tonight, everybody. Have a great rest of the evening. Look forward to working with you, and have a great summer.